And I'll try to make sure that each one of you has a first shot at a question before we do that. And so I won't really get into long introductions here because of the fact that we just have 1 hour. The theme of this session is really innovative solutions for financing infrastructure, and we'll try to do this in 4 rounds of questions, and time permitting, we might take a few more questions from the audience also. My first question is going to be about what is the current stance of lenders or markets, for that matter, towards infrastructure projects or developers. Are they more positive, less positive? Are they more favorable, more receptive? And I'm going to begin first with Mr. Radhakrishnan from SBI. And he's Deputy Managing Director, SBI. Mr. Radhakrishnan, please.
Thank you. Banking industry is quite positive now in lending to infrastructure. And we also have the balance sheet capabilities back to lend. And so in that sense, industry as a whole, State Bank of course, we have a lot of money to fund infrastructure. That way, we also had our own share of problems in the past in terms of project-specific challenges as well as challenges from the sponsors. But now we are on top of all that. We have better capabilities in assessment, appraisals, and so the industry as a whole is quite positive. But really, that is not a challenge. But the real challenge comes for us in terms of the structuring part of it, where of course I'm sure that Jaishankar also in his speech was articulating quite a bit on that. So that is something which if an institution like IAFCL can do, take out finance structuring in a bigger way and also guarantee for selling it in the market at a matured state. These are things which will further enthuse lenders to get into the green stage part of it. Because we have certain caps in terms of how much money we can give long term.
Right.
So this will be a great value add.
But is SBI today, are you more hesitant, less hesitant than you were 3 years ago?
We are absolutely on. There is no hesitation at all. We are quite positive in lending to infrastructure.
So let me ask you, are you therefore more positive than you were 2 years ago? Or at the same place?
No. See, essentially we did suffer quite a bit in terms of our exposures to various, because of some of, but things have evolved.
Right.
In fact, we are quite positive. We are quite aggressive also in infrastructure lending. That way we are. In fact, even our numbers also, we are almost 10-12% growth
right.
we have in infrastructure.
Okay. Let me go to Mr. Amitava Chatterjee now. Mr. Chatterjee, you work with a lot of banks, you work with a lot of clients, and you put together funding packages, financing packages. What are you seeing? My same question. Are you seeing other people, SBI, as Mr. Radhakrishnan said, has always been willing and is willing still. What are you seeing with other banks? Are the other banks become more willing or less willing and towards infrastructure projects?
Yeah, thank you. A very good morning to all of you. And of course, congratulations to
yes, Mr. Amitava Chatterjee, I'll repeat, is Managing Director of SBI Caps. Yeah, go ahead.
For, like Mr. Pawan Kumar said, for attaining adulthood. Congratulations. Yes, I would agree with what Mr. Radhakrishnan said, but then what I would say is it has matured a lot at the moment. The infrastructure financing and the other banks coming in, they are much more comfortable with the the policy initiations that have been taken to mitigate the primary risks that were there in infrastructure. So, for example, if I talk about renewable, the financing to the renewable energy sector, the transmission sector, they are now almost on standard templates that they are being attended to. The major risks related to the land acquisition, say the operational risks, have been addressed to a large extent. So I would say it has matured and the banks are quite comfortable, except maybe for the thermal energy part, I am not very sure because it has seen its weaknesses of discoms and other factors, the coal shortages and all. So that might have had an impact on that part. Otherwise, the other sectors, I see quite a bit of enthusiasm among the bankers.
Okay. Mr. Pawan Kumar, who you heard from earlier today when he made his presentation, who is Deputy Managing Director of IFCL, also co-host or host today. Mr. Kumar, are you, it seems to me that from the answers that Mr. Chatterjee gave and Mr. Radhakrishnan gave, that banks are quite willing right now, right? Now, he did say that they've always been willing, but I'm not sure that was the case. I think 2-3 years they were not willing, as willing. Maybe SBI was always willing. How do you suddenly, and earlier Mr. Jaishankar talked about, greenfield is where there are still some issues. Also, this is where the banks can play a bigger role, right? So are you therefore seeing more appetite among the banks for greenfield projects? Are you even seeing more demand? Maybe there is not as much demand. What is your view of this?
Thank you, Alok. First, at the outset, you said we are happy to have a great panel. I would just come on that issue because that is haunting on back of my mind. Panels are always great. What matters is the quality of discussion the panel produces. That is what for the audience is here. So I assure that we will have a good discussion going forward. Coming to the question with regard to the appetite of IFCL as an institution, yes, at this matured age of IFCL at 18, we are willing to extend a helping hand to the banks. We believe that banks are the first point of call as regards greenfield projects are concerned, because the developer is already having a close relationship, working relationship with the banks. So obviously they become the first point of call. The issue is whether in some of the sectors we have seen a tendency that commercial banks are going a little more aggressive in their approach, where we feel some kind of moderation is required by bringing in a sense of co-lending in their policies. So not that what appears to be safe today will not or may not result into future. So that is what we believe as a responsible institution, that banks have to have a policy call by their boards that yes, we have to have 2 or 3 co-lenders in every infrastructure project. As we know that infrastructure sector is fraught with all kinds of risks associated. Coming to the ALM and other things, once even at the greenfield stage, once the project crosses over to the brownfield, then the new set of lenders again can come in and kind of play a relay role, wherein another set of lenders join in after the project has become operational for a couple of years.
Okay. Ms. Badal, what is the stance or opinion towards infrastructure projects in capital markets to begin with?
First of all, happy birthday to IFCL. Welcome to adulthood. You're turning 18. That's a significant milestone. And a happy new year to all of you. So from a capital market perspective, there has been a lot of activity in the infrastructure sector. So I would like to start by saying that infrastructure has always been the backbone of every economy. But there has been a huge evolution how infrastructure projects are perceived. And as Mr. Jaishankar pointed out, that there's a greenfield project and a brownfield project. The brownfield projects have seen a lot of structuring, innovation, packaging, which made investors a lot more comfortable in the capital markets. And that helped, apart from banks, other institutions also to play a very, very important role. So today we see participation in the infrastructure projects, not only from the banks or I would say, the conventional institutions. There are new players who have also entered this market. And a lot of issuers are willing to take that chance also. They put in a lot of effort to structure them well. They are rating agencies who are understanding the structure, giving them a good rating, giving that confidence. And then we have the whole set of institutions who are willing to invest the time to understand that structuring, get that confidence and invest. So there's definitely been a diversity and diversification in the quality of investors and the kind of investors and the kind of money that has come into the infrastructure sector.
Okay. Thank you. Let me now go to Mr. Bansal. Mr. Bansal is Managing Director at Fitch. And Mr. Bansal, what are the kinds of requirements from a credit rating point of view that you're seeing among the new investors, like pension funds or insurance funds, and are the developers meeting those requirements?
I think from a fixed income perspective or a bond market perspective, what investors like is predictability and no surprises over the life of the instrument. I think that's the key requirement, and for that, what you need is a better protection from a cash flows, right? The fact that we are talking that there is a better structuring and the bond markets are appreciating, I think InvITs is a classic case where you have more than a dozen InvITs operating in different segments of the market, and investors are lapping it up. The reason is there is a better protection available in that. So I think from a bond markets perspective, global investors perspective, if you leave the surprises out, you need to have a capital buffers, higher capital and liquidity buffers, which market knows it all. And if you are able to structure it well, I think bond markets just look.
And are you therefore seeing more projects that are able to do this or not?
Yeah, so I think operating projects, globally operating projects shift to bond markets just because there are better cash flows and there is a better history for that. And if you structure them well, and I can give you an example that we just even rated a project which was a D project, and because it got structured well, it got all the way up to an A+. Now, change of ownership, better sculpting of debt, maybe introducing a layer of mesh debt, putting a bit of liquidity buffers, all that helps when you're looking for a project ratings from a credit rating perspective. But anyway, I think I should make that thing. What I'm saying is, in my personal capacity, does not give you an analytical opinion or has an impact on the ratings from an agency. I should have made that things before that. So compliance is very clear that as a business function, I am segregated from the analytical side.
So if you, as lenders, which I think we become little wary of, there should not be an artificial coating or sweetener on that. Of course, the other side developers would be happy to listen to this musical note. D becoming A overnight.
Okay, so if you happen to make a mistake and lose a lot of money because of what he said, you cannot file a lawsuit against Fitch. Only against him.
Yeah, just coming to the point. Right. So it's not a D coming to a D is a missing of a payment. What D means is not a permanent loss of capital.
Right.
Now D means is a 24-hour discipline.
Right.
Now, if you're missing that discipline, we will not hesitate to put it to D. Right. But that does not make the thing. And also, I think one thing is, if you look at the project economics vis-a-vis the loan economics, a lot of time we miss the point.
Right.
Project economics and the loan economics both are operating very differently, and that's something which we still need to work on.
Okay. Mr. Yashpal Singh, who's been listening very patiently to all of this. Mr. Singh, what are you seeing right now in terms of the kinds of funding structures that are taking place, or financing structures? Are there new strategies? Are there innovative solutions that you can talk about?
Yes, sir. Regarding funding, so what we initially you asked the question in terms of the banks, whether they are conservative or becomes more liberal in terms of funding.
Right.
Of course, what are the NPAs that the system generated in the last 10 years or so? I think we are out of it, and now the banks are definitely coming back to with a more.
So they are more. So they're more willing than they were 3 years ago.
More willing than.
Okay. Yeah.
And in terms of structure, I think the conventional structures are already in place, whereby I think they are playing major roles. But apart from that, the new structure in terms of the infrastructure bonds or the green bonds or the InvIT structures, I think that's also taking shape, and slowly I think and going forward, I think we'll see a lot of funding through these kind of instruments or some more innovative instruments going forward. And what we have seen in the last, I think, some 10, 20 years, we have a lot of funding which has taken place from the domestic savings, channeled through the banks or maybe through the government and all those things. And the less of funding has taken place from the whatever the funding that has come from overseas. But now going forward, we see that the foreign developers or the foreign investors has also developed a lot of confidence in the Indian market, and going forward, we see that a lot of funding will come through the foreign funds.
Okay.
Of course, the domestic, the savings will definitely play a major role, but I think the proportion in terms of the foreign funding or the foreign funds coming here, I think slowly is going to increase.
Okay. Mr. Chatterjee, if I can ask you the same question, what are the new and emerging sources of financing? Because you know, as I was saying earlier, you know, help the developers get to these various sources.
Yes, like he mentioned, the association with the multilaterals, I mean, getting the multilaterals. In fact, they also bring in a lot of experience with them regarding infrastructure finance. So the creation of a structure along with the multilaterals is the new, I think, emerging structure that is happening. Then we also have the municipal bonds. I mean, although still not very deepened. Then I wouldn't press on this issue, but then the credit enhancement solutions are again the new emerging trends that we see. In fact, Mr. Jayashankar has been mentioning since morning. So, and of course, the financing of a life cycle of a infrastructure project. Different lenders at different stages. I mean, that is very important. Like banks, I would say the banks are really challenged with the ALM part, but they have been very, very, I mean, in the initial stages of conceptualization till the project implementation, banks have been very, but then they cannot stay along till the end of the life of the project. So we need to have people and the acceptability of maybe a private equity coming in with a upfront return that has to be accepted in the process. So these are the new emerging trends that we see in the infrastructure.
Okay. Mr. Radhakrishnan, how are you seeing trends in terms of how the loans are being structured, either in terms of tenor or terms or rates?
Loans structured.
Yeah, just structuring. What, are there any new structuring trends?
No, see, the word restructuring creates anxiety in us. So basically, it's all about structuring. I can tell you recently also. So one of the problems also with commercial banks playing an active role. I think your original question was about new source of financing.
Right.
That is something which is, given the country's aspirations, 111 lakh crore or 140 plus lakh crore, the revised numbers. I think there's a huge gap between the existing capacities of lenders or financiers. That is where I think the commercial bank lending has also its own challenges. Commercial bankers are by design not meant for lending to infrastructure, though we have been doing it because there are no other active players or some players vacated that space. So in that sense, the structuring part of it, we always look at structuring a project loan from a commercial banking perspective of fitting it into what is the tenor that my ALM will permit or tolerance. That is where the challenge comes. So even recently, some 50-year, 60-year project, we try to package it into a 20-25-year loan without the kind of thing that Mr. Jayashankar was articulating. So we end up making a higher front loading of either tariff or front loading of the burden on the state in terms of grant. So these are the issues where probably we have to mature if really we need to scale up our capabilities to meet the needs of 111 lakh kind of aspirations. That is where the new source of financing are also required to be there. So, I mean, if we really look at it, like we would like a situation where we get in at the the project implementation stage for 4 years, 5 years, 6 years, whatever be that time, and through a takeout mechanism, some long-term players step in once it gets into steady state. That is the kind of structure if it evolves. That's the way we would like to get in, get out, and then it's taken care of by pension funds and insurance funds who have long-term patient capital. That's the way.
Okay. Yeah, Mr. Bansal, you wanted to add something?
I think Mr. Radhakrishnan makes a very relevant point. You know, typically bank finance or debt is 70% of the capital, and you're trying to recoup that capital in half the concession period. That's not even what the project authority at the time of bidding is looking at. Now, in a capital market perspective, I can give you an example, not in infrastructure, but in case of real estate, which is commercial real estate. What we do is, typically you have 50%, 60% amortization over a 10-year period, and the balance is left as a bullet to be refinanced at the end of the bond life. And then it serves the purpose which Mr. Jayashankar was saying, in a manner that it refinances with a new set of lenders at the end of the life of the instrument. And that's how the thing goes on, rather than sculpting the debt to match your ALM, where that's a sure shot recipe for a disaster, because project will generate the cash flows which it is designed to. It will not generate cash flows as per a bank ALM.
Right. Okay, thank you. Mr. Pavan Kumar, IFCL not only provides the money, is also supposed to provide ideas. So what are the new things that you are seeing in terms of sources of financing? I think we've heard about InvITs and everything else as well. And what about new and innovative solutions or strategies that are truly new? You know?
I think just touching the last point first, we are seeing there is a lot of churning of assets in the sense. For the first time, we are seeing that there are two sets of infrastructure asset owners. One are developers, and clearly there are operators. So this is a new trend which has just crept in last 3-4 years as a result of some very good policy measures taken by the government. So let's acknowledge that and appreciate that, yes, a sense of maturity has come in our infrastructure sector. That is how what has led to the increasing interest from the foreign institutional investors. And that is how the lot of patient capital is coming in, whether it is tax incentives or whether it is the other policy initiatives by the infrastructural sector, government nodal ministries. They have facilitated this clear-cut movement. Now, having said that, we at IFCL, we are there as sources of providers of finance. We are partners with the banks, even at the green stage, and till the brownfield stage, we are the only providers who are there for 7-year, 9-year, 11-year, 13-year, 17-year, like we were there in NHAI InvIT, as I said in the morning session. So like we are there from birth to eternity. Till we are the only unique institution, unlike banks who are there. Till the life cycle, I will not say the death because it doesn't sound good, from birth to death, but till, yes, that is why I have carefully used the word till eternity. Right. So from birth till eternity, even if we are there in the greenfield stage, we will remain till the project finally repays the money, and would be happy to hand over the baton to another set of lenders, as Mr. Jayashankar said, that tunnel financing, if it has to go on and go on, then we are happy if some national assets get created and we become partner in the progress of the country.
Okay. Ms. Mittal, if I can come to you now, how can infrastructure developers or operators, as Mr. Kumar mentioned, tap capital markets better? What can they do that they are not doing, or what are some of the things people have recently done that have helped them tap the markets better?
Sure. So we are looking at the alternate sources, how to tap the capital market, if I have to answer, put it this way. So as taking forward what my dear panelists said and putting all that together, capital markets or the bond markets is nothing but an instrument in which anybody can invest. But in all our conversation, we have only been speaking about institutional investors. While in the recent past, surprisingly, And why should it be surprisingly, as a matter of fact, we've done some public issues of infrastructure companies, precisely InvITs. And the pleasant surprise was that we saw response from non-institutional investors. There were special buckets which were kept for them, and we all were really concerned whether those buckets will be full or no. And we were very pleasantly surprised that they saw overwhelming, I would say overwhelming response. And in fact, for one of the InvITs, it did 25-year bond. It created history in itself, that you can get long-term financing from alternate sources as well. And at the same time, when institutional investors also showed confidence, it gave confidence to the non-institutional investors, which could be people like us who are investing our money. So what we are actually doing, what our, I would say our Honorable Prime Minister always said, the Atmanirbhar, I would say we are trying to mobilize your saving account and your FD money into bond market, because bond market is also nothing but an instrument which is giving you interest. And with our rating agencies doing so much of work, they give a good rating that puts confidence in an investor that it's been structured well. There is better dissemination of information. There is more education, which regulators have been helping. Regulators have put in a lot of guidelines around it for investors to be able to understand what does a bond means, what it comprises of, and how it works. So we saw the public issue of that market picking up extremely well in the recent past, which is a completely alternate source to the institutional money, which we have always looked at. So that could be an alternate, I would say, source, which we'll see in recent, I would say, future. And of course, as Mr. Amitabh also slightly touched upon, is the municipal bond market. So that's another market which we will see to be growing leaps and bounds. If we go back into US, a US market is, a municipal market is 10% of their GDP. While if we talk in the Indian context, we are not even 0.01%. In last 3 years, we have seen a total fundraising of 4,000 crores, which is nothing but peanuts. When we are talking about Amrit scheme, we are talking about smart city schemes. We are talking about only states and centers getting their money from budgetary allocation. Why not look at alternate sources? So we feel that municipal bond market is going to be an important sector to watch for in the infrastructure development.
Yeah. And I know that many years ago there was Ahmedabad bond. I think 20 years ago, perhaps there was an Ahmedabad Municipal Corporation bonds.
Absolutely.
And then there was a Tamil Nadu pooled city bonds, etc. And Pune, recently there was a Pune bond.
So there's been total of 13 cities only who have done municipal corporation till now, which accounts for 4,000. In fact, the first municipal corporation has come forward. Mr. Amitabh can also talk about it, which is actually again coming through the public issue route for the green bond. And we will look at from the blessings from the institutions and from the non-institutional investor. And what is also a learning is people are interested in investing in their own environment. Because municipal bond means you are investing in your neighborhood. You are giving money for the purpose of your city.
Thanks.
So there's been quite inquisitiveness, I would say, in a positive way.
Thank you. Let me now go to Mr. Chatterjee. Mr. Chatterjee, my next question is going to be more about innovation that you have been involved with, or your organization has been involved with, or your client has been involved with, right? I know you're relatively new in this particular position, so it's a bit of a hard ask. But you know, what's the one thing that SBI has done or SBI has advised people to do that you think is something that other people should know about because it'll help them as well?
Trade secret.
Yes, trade secret.
Well, I would like to speak about InvITs, but then
yeah, I think we have all accepted this. We stipulated the fact that InvITs are good.
Quite discussed topic. One innovative thing that I think SBI has done and which has helped in the sustainable infrastructure financing is association with the multilaterals in case of green lines. There are quite a few multilaterals, to name a few, it's KfW, EIB, then World Bank. They are quite keen as a part of the COP26 resolutions. They are quite keen in providing concessional green lines to the developing nations. So SBI has done a lot on that. I mean, 1.87 billion already sourced. So there, SBI can pass on those concessions to the end developers. So that is one innovation I think other banks and other institutions also can look at.
And is there more of that available now?
Yes, it is.
So we have not
lot of it available. Yeah.
Okay. So we're nowhere near tapping it fully.
Yes.
Okay. And okay, let me go to Mr. Singh now. Mr. Singh, similar to what I asked you before, but and similar to what I asked Mr. Chatterjee, can you give us an example of something that you or your organization has done for the clients that you think is particularly innovative or particularly noteworthy? And it can be from any aspect. Structuring, risk sharing, financing, new sources, whatever you think is something that you think you can point to as something that showcases your organization's capabilities.
So regarding this funding of the financing instruments, what are the instruments available in the market? I think that we are advising our clients to just take some advantage of that in terms of long-term funding, in terms of whatever the funding which after the execution risk gets over, then basically they can go for the refinancing and reduce the cost of the funding for that. These are some of this thing, and we are in the continuous churning process in terms of refinancing, maybe one refinancing, two refinancing and all. Of course, there are some restriction by RBI in terms of elongation of the tenure and all those things will come into the play. But then somehow some structures are being devised whereby we can take care of that. Otherwise, there is being considered as the restructuring. So this is the one aspect. Other aspect is in terms of course, the InvIT is, I think everyone is aware in terms of the InvIT structures. Apart from that, then on the way to take care of the risk and all those things, of course, there in terms of the power projects and all, the risk is something where the DISCOM risk, I think the government itself has come out with the structures whereby I think by taking or diverting this risk to the SECI or NTPC, I think the DISCOM's risk is being shifted to some extent on the SECI or NTPC PPA, so that this entity or the developer feel more comfortable in taking that. Otherwise, the DISCOMs of many of the states are not creditworthy, and they will not be in a position to undertake those projects. But with the help of the SECI and all those things, SECI and this NTPC, I think some of the risk, which generally this gets passed down to DISCOMs, is basically taken care by the SECI. And so the developer is more comfortable. And that's the reason that a lot of investment has taken place in the renewable sector in the last 8-10 years or so. Had it been left only of the DISCOMs, and then definitely I think we would not have seen this kind of investments. So these are some of the structure on the road structures, on the road sectors. Of course, the InvIT is I think one of the structures I think where the developers feel more comfortable, especially after the operation this construction risk gets over. So these are basically some of the stuff. Apart from this, I think what we have been advising the clients is in terms of the execution risk, wherever we can the developers can take up the execution risk. But in terms of land is something I think which of course the government agencies, they have taken care of the substantial risks. I think whatever this land acquisition, this problems were there in the last 10-20 years, right, substantially the risks have been reduced.
Right.
So the developers are more comfortable in terms of going ahead with the project.
Thank you. Again, persisting with this new and innovative theme, Mr. Radhakrishnan, I know that your last question also, in your last answer, did allude to something that you are doing now that you weren't doing earlier. But anything else that you feel SPI has done, which is noteworthy, innovative, that you would like people to know, or maybe if you don't want, even if you don't want people to know, people can benefit from?
Very honestly, nothing greatly innovative that we have done. We have been more of a plain vanilla lender. So some innovation we have done more from our own angle of managing the regulators and managing the ALM, not something that adds value to the end user, like having a put option of 7 years and managing that within the cap and things like that. But basically the innovation in terms of structuring is specific to the project. Every project requires an innovative structuring. Like I was mentioning, funding a long term with short term and all. That's where, given a choice, we would like to structure it in a way that not that it is all front loaded, but having some ideas is one thing and doing it is another. So in that sense, everything we try to fit into our way of thinking. So that is where I will say, and institutions like IFCL, NAFID, they should take the lead in terms of providing that intellectual content in terms of innovation, be it structuring or be it developing new market. Again, a lot of discussion about the bond market. Contract enforcement still remains a big risk, notwithstanding IBC. Still, we have a long way to go. So, AA, AAA, or some government guarantee. Beyond that, I doubt whether there will be enough appetite for any instrument in the market. Until that happens, where the confidence is built that resolutions can happen faster. Bond and all, so will continue to be there. So there is a huge opportunity for an institution like IFCL to have a real, take the lead in terms of providing innovation in all aspects of that, maybe in NAFID also. And there is scope for many more IFCL and NAFIDs in the country. So that's where we as commercial bankers would be very more than happy, as he was also mentioning. We would like co-lending. Co-lending is another innovation. We are more than happy to have, and as a matter of policy, we don't want to take more than 20-30% in any project, though we do underwrite for facilitating that transactions to happen, financial closure to happen, but we will be more than happy to have more such institutions coming in. These are some of the things that we do also have a very active outfit, PFSBU, with a lot of capabilities built, and SBI CAPS, we have huge talent sitting there. We can all work on the innovative structure creations and creating confidence in investors. Those are jobs to be done.
Okay. Mr. Pawan Kumar, so what are some of the innovations that we haven't heard about yet that you're currently working on that you can share with us?
I think a few of the things where we are pretty active on is the project guarantee completion mechanism, which we are in touch with the ministry, and we are participating with them in kind of conceiving this, so that kind of some sort of guarantee mechanism or insurance mechanism is built in at the time of the conceptualization of the project itself. So which would give a kind of safety net for the lenders as well as to the investing community. So that is one. The second innovation in terms of, I'll not say in terms of the mechanisms, is that we are also pretty open to kind of various other experiments. This second thing we asked for was the tripartite agreement, wherein the lenders also with the concessioning authority are made a part of that mechanism. Now, why it is essential is because if something goes wrong, the developer and the concessioning authority are engaged, whereas as Mr. Radhakrishnan said, 70% or 80% money is ours. So we are not even aware of what is happening behind the scene, and we are not even invited, versus we are not even invited to the negotiation, how much is the money to be paid. Leave aside the arbitration and the legal enforcement and all those issues. The third thing is the rating of...
Sir, if I can stop you there. So when you mention this to the authorities who can do something about it, what is their response? Are they going ahead with this?
I have been a part of the government. Nothing comes quickly from the government.
Okay.
अभी देखते हैं, अभी सोचते हैं, अभी करेंगे.
Okay. With a lot of pauses in between. Okay. It's not as fast as you said. Okay.
You see, when we are lenders or investors, things have to move fast. I have to put my money on the table.
Right. Okay. There's one question I definitely want to get in before I take questions from the audience. This is an IFCL requirement that I ask you about budget expectations, so perhaps they can relay them further to their bosses, who can relay them to their bosses. Budget expectations or wishes. Let me see. Mr. Chatterjee, we'll begin with you.
I don't know. Maybe
Let's just list 2 or 3 of them, so because that will give chance to others as well.
Maybe
so two of them.
Like Aditi mentioned, I would like something to strengthen both the municipal bond market and the bond market in general.
Okay, so bonds related, yeah. Okay.
It is necessary. See, we need to come out of the structure where traditional lending has been happening in the infrastructure. We need to have retail participation.
Okay, that's good. Mr. Singh, I'm sure you've helped many clients draft these budget recommendations. So what would be the 2 or 3 things that you think the budget should look at?
Under this InvIT structure, a lot of this tax concession is provided, especially to the foreign investors. So we feel that going forward, I think the government should come out more concessions can be given to attract more foreign capital into the different infrastructure sectors.
Okay.
That is one point number 1. And other things, what the government has used these plans in terms of Gati Shakti and this national infrastructure plan. So in terms of, I think the government should more clean out how to attract the investment, because it was huge investments. So I think there is a challenge in terms of how to attract the huge investments required for these sectors. So the government has to come out and give more incentive to attract especially investment in these sectors.
Okay, so more incentives and more concessions to the foreign investors,
yeah.
and more incentives for
domestic.
For domestic. Okay. Ms. Mittal, what would you ask for?
I'm going to ask for something very specific, and I would request all dignitaries, whoever can take my voice to the government, and if it is possible. I'm going to request and hope for a very simple change in a bond market for retail participation, as Mr. Amitabh also said, and as Mr. Singh said, that taxation plays a very important role in investment. Every financial instrument in India has indexation benefit, except for bond. Are we saying a bond is not subject to inflation and income coming from bond is not subject to inflation? That's not fair. And in every budgetary speech, we have spoken about deepening the bond market. So if a simple change of indexation can be applied on the bond market, we will see floodgates opening up from non-institutional investors.
Mr. Radhakrishnan, I'm sure you've already communicated to the government already what you would be looking for.
We have. Government is also as keen as anyone to promote infrastructure. Huge challenge. So they have been consistently doing a few things that I think, like one thing, interest rate that we charge on the infrastructure, which are long-term assets, the lower the better. Anything that they could do, considering infrastructure, interest income from infrastructure exempted, and any lending to infrastructure getting exemption from, that of course is Reserve Bank has a role also there, exemption from priority sector obligation, because priority sector obligations also put certain burden on the banks. So these are something which will enable cost cutting to infrastructure to some extent, which will be a good thing for the state.
Okay,
And
right.
other things we have filed quite a bit.
Yeah. Mr. Pawan Kumar, I think you alluded, Mr.
I
Jaishankar, and you
belong
both
to
mentioned a
tax
couple of
department,
things.
so I'll carry these suggestions to the
Yes.
right corners.
Okay. I have one question from Mr. Bansal, which is somewhat unrelated or role-related. What are some of the credit enhancement measures that are currently being used by developers that you find acceptable?
Which you find?
That the rating agencies find acceptable?
So, there are a number of, there's not a
Okay,
single
three-
credit
three-
enhancement mechanism or a feature you can say it is acceptable.
So maybe
There
you
are
can
number of
mention
them.
2 or 3 new ones.
So now, I think active mezzanine market is something which is key for development of a bond market. Now, I think in India, you don't have an active mezzanine market. What we have is active debt market. Now, if you have an active mezzanine market, some of the problems of the bond market get solved because there is someone who can absorb the shock. Right now, the whole shock is shared by senior lenders and equity. Now, you need a mezz piece, and mezz has to be in lieu of senior debt and not in lieu of equity, which I think in certain places I find that mezz gets given in lieu of equity. Now, mezz has to be in lieu of debt because what you're looking at is increasing the protection for a senior lender. Now, the problems happen because things don't go as anticipated. There is a disruption in the cash flow. Someone has to be there to absorb those things. It offers a better ROA to the lending institutions or the institutions. Maybe foreign investors are great in doing this mezz piece because, as I said, over a life of a project is not necessarily bad. We have a good Bandra Worli ceiling project or different roads and other assets. They might have defaulted, but they are serving a good national cause.
Thank you.
That's, I think, one single thing I would say, if we have, it can do a long way in terms of activating the thing.
Okay. The last question from me for each one of you, and then we may or may not take questions from the audience depending on the time. Beginning with Mr. Radhakrishna, what's the biggest challenge that you see, sir? The one challenge or headache that makes your job harder? As far as helping infrastructure development is what I'm yeah. So the one thing that, what would you say is the biggest challenge for infrastructure financing?
The challenge is not about, from the financing angle, we finance viable units with reliable sponsors.
So what is the other challenge that you see?
The challenges in the overall, in the ecosystem challenges, I would still say that we have still a long way to go in improving the ecosystem for more and more of infrastructure financing opportunities and infrastructure creation opportunities.
Okay, and when you say ecosystem, could you give us one example of challenge?
In terms of any environment approvals and clearances and
approvals,
things like that.
So that's still
and various coordinations. Even now, getting any state, I'm talking about it from an infrastructure development point of view, not from a banker's infrastructure financing. We have learned our lessons.
Right.
We finance carefully what we want to finance. Right. But if we want a development, that ecosystem improvement is, of course, government also has taken a lot of steps in that direction. That is something where we need to, that's where even an institution like IFCL should not stay with only infrastructure finance. The development should be integral part of it,
right,
to make sure that the ecosystem development they contribute. That
right. Okay. So ecosystem, yes. Mr. Chatterjee, what do you see as the biggest challenge?
I may sound mundane, but I still feel that it continues. The complexity of the contracts and the enforcement of those, the surety of the enforcement of the contract still remains the major challenge, because infrastructure financing is a very complex procedure, involves multiple stakeholders.
Right.
So I feel that remains the major.
Okay. Mr. Singh, what do you see as the biggest challenge?
So biggest challenge I still see in the I think the power sector. I think there the discoms. Though a lot of work has been done, various governments have during the policy and just to improve the performance of the discoms. So we had this. I think by the turn of the century we had this ATC losses of more than 40 to 43% has come down to maybe around 20%. Right. But still the financial health of the discom, most of the discoms, I think still that is the biggest challenge, because what are the investments in the renewables and the power sector, which I think is going forward. When you move to the green energy or net zero, this thing, we have this. I think this is going to be this in this discoms part of the ecosystem. The discom will play a major role. Right. I think that seems to the biggest challenge.
And this affects all sectors, because power sector in a way is the infrastructure of infrastructure.
Yes,
right. Okay. Ms. Mittal, what's the biggest headache or challenge?
I'll speak from a capital markets perspective. Is undoubtedly infrastructure sector is one of the most complex sectors. Willingness of investors to understand that complexity and to invest that much of time to understand, to extend a long-term capital, which IFCL has been doing brilliantly well, so we have more interest from the other investor class. And second, for the sake of repetition, I'm going to say the taxation of the interest income arising from the bond market.
Okay. Mr. Kumar?
I'll not repeat what has already been said, but just to add one point, I think the interest rate cycle bumps are going to be a challenge, because whenever the rates were falling, we were going long. people were saying, "Abhi thoda wait karo, abhi aur niche aayega."
Okay.
Now it's going up. I still see the same challenge from long-term seekers. They still wait. Abhi thoda short de do, baad mein niche aayega. So I think bumps are interest rate cycle, the way it is behaving is proving to be a challenge, whether it is a falling market or whether it is a rising market.
Okay. Mr. Bansal, what do you see as the biggest challenge for infrastructure investment? One.
There are, I would name two.
Okay, two.
Okay. Big is becoming bigger. There is a wave of consolidation
Right.
in the sector, and that poses a challenge in terms of who provides capital, because there will be sectoral caps, there will be issuer caps. We have limited set. Bond markets, I think if you look at insurance participation, provident participation in the infrastructure sector is yet to take its logical space, because if you look at typically,
Yeah, so just 30 more seconds, that's all.
okay, so that's one part. And the second part is addressing counterparty risk. Counterparty risk from DISCOMs was said. SECI offers a great example, or NTPC, from a DISCOM perspective, but that model needs to be replicated for other segments as well.
Okay, great. We have 6 minutes for token audience participation. So we might have time for one or two questions. If you can stand up, I'm afraid I'm not wearing my glasses. I will not be. I'm going to ask Radhika or Chanchal to help us out. If you have a question, please stand up. All right, so there are a number of raised hands, so I'll have to make a choice. The gentleman sitting in the sofa, so I'm assuming he's more important than others, so we'll take one question from him. Go ahead, sir. Please do a stand up so the cameraman can find you. And the question can only be addressed to one panelist, otherwise it will be, yeah.
Yes.
Yeah.
We are representing Indian Travit InvIT. My question is to Mr. Bansal from the rating agency. As we heard that a project went from D to a well-rated category due to certain structural changes, and how market is very buoyant for InvIT lending, Aditi can say the bond market is still wanting a AAA rated paper only, even if it's InvITs. There is no demand for a AA rated. InvITs can't be AA rated also. In fact, the regulator has not thought about what happens when the InvIT rating gets downgraded to AA plus. So we don't know. Rating agencies are still very fixated
So
on...
your question.
Hi, my question is, rating agencies still very fixated on the DSCR requirements for AAA InvITs being very high, as those were for SPV level financing. That is leading to InvITs not being able to leverage the amount they can, and the lenders are also wanting to fund. So there is a mismatch there to the amount of capital.
So you want him to comment on that?
Yeah, why are rating agencies not being moved, or looking at the revision in criteria towards this?
Yeah.
You
So
know?
if you can answer this 75-second question in 60 seconds, please.
Sure.
Go ahead.
I think as a rating agency, we are not looking at the 99 good years where you may be able to repay your loan. I think we are doomsday guys, and we look at the 1 year where you will face problems. So never we predicted a corona or a shutdown or anything like that, and hence the DSCR requirements. The fixed income investors are looking at timely repayment of principal and stuff like that. And as rating agencies, it is a fiduciary responsibility to safeguard their concerns and their interests. So, yes.
Thanks.
The higher is the ratings, higher the benchmarks.
Okay. Next question, go ahead, sir.
Hi, everybody. Jayan, and happy birthday to IFCL. Jayan here from Mavoka. A question to the panelists, and Alok, you can decide whom to hand over the question. What's the wish list from the regulators for infra financing? Regulators like SEBI, RBI, IRDA, PFRDA, EPFO.
I think some of those wishes have already been expressed. Mr. Chatterjee, do you want to take a crack at that? Or if it's SEBI, then maybe Ms. Mittal, do you want to take a crack at that? Or yours is, I guess anyone can.
I think SEBI has already done a lot, because if you see in last 1 year, we have a municipal corporation regulation which has come in, public issue regulation which has come in. There are timelines that have been put around, due diligence procedures has been laid down. So we would say it's a learning process, regulators are also learning, and as market gives them the feedback, as lenders, as issuers give them the feedback, they have been doing a proactive job.
Okay. Mr. Kumar, anything you would like to add?
I would like to add that wish list from SEBI is, I think our debt is listed and we are subject to almost as much regulation as any other issuer of equity. So we would pray for less regulation
Okay.
for entities like us.
Okay. Mr. Chatterjee, anything you would like to add in 15 seconds?
So, it remains the same.
Okay.
The regulations on allowing retail investment in the infrastructure sector.
Okay.
That is the most
Thank
needed
you.
thing, I think.
Thank you. Last question, please. Go ahead, sir. If you can stand up. Yeah.
My name is Vineet. I'm from Powergill Treasuries. I would like to bring to the notice a fact that the awareness of InvITs as a safe, credible investment avenue hasn't sunk in to the extent it should have been right now with institutional investors. Here I would like to point out the provident fund investors. The investment pattern has outlined a special category 5, which specifically allows for investment of the exempted provident fund trusts into these InvITs. But there is a resistance to change and clear lack of information and awareness amongst the board of trustees who select, who happen to be on the, say, fund managing level. So, education drive or for creation of awareness about this existence of the product and its features and how is it suitable for pension funds and provident funds. This needs to be done.
Yeah, I think it's a very important point. We'll raise a bit of it in the next session where we've got 2 InvITs present. And some of them have done a lot of evangelical work already in this area. So we'll table it for the next session. Please join me. This has been a fantastic session, very informative, very insightful. And for that, we owe gratitude to Mr. Singh, Mr. Chatterjee, Ms. Mittal, Mr. Kumar, Mr. Bansal, and Mr. Radhakrishnan. Big hand for them, please. And I think the IFCL people would like to thank in a more formal way as well. Please come
Thank
on.
you once again, everybody, for a very interesting session. There's a small round of token of gratitude for all the eminent panelists. I request our DMD sir to kindly hand over some mementos. Ms. Aditi Mittal. Mr. Amitav Chatterjee. Mr. Yashpal Singh.
First they are giving me and then I'm on.
Mr. Tarun Bansal. Mr. V.S. Radhakrishnan. Can we gather for a group photograph, please?